Hey YouTube, welcome back to Investing Club. Before we start the video, quick announcement. I finally created a Discord. I know it's been a while since I said I was going to make one, but I finally got it done. It's going to be the first link down in the description. So if you like the videos you see here, join the Discord chat. In that chat, I'll share 3 stocks I'm keeping an eye on right now. And I want to make this a new series for the channel. I'm going over Spotify today because that was requested a lot. So I'm thinking every Saturday I'm going to make a video based on what my subscribers want. So if you have a stock you want me to cover next Saturday, join the Discord and put the name of the stock in that chat, and whichever one I see the most is the one I'm going to make the video out of. So again, Discord, first link in the description, join it right now. So for this video, we're going to be going over Spotify, and Spotify has been a heavily requested stock, and there's a pretty good reason why. It's gone up over 100% since March. So in this video, I'm going to be talking about Spotify, what they have going for them right now, and if I think this valuation is extreme. So we're going to jump right into the Q1 2020 shareholder letter, and I think this letter gives a great insight into the position of Spotify today. So Spotify, one of the rare companies that actually did well during the pandemic. Despite the global uncertainty, our business met or exceeded our forecast for all metrics. And for the rest of the year, their outlook remains pretty much unchanged. So this is the rare company where this pandemic doesn't really affect them at all, and if anything, it helps them. So that's one of the big reasons for the recent price jump in Spotify we've seen. If you don't know who Spotify is, they're one of the largest music and podcast streaming services in the United States. And odds are, if you're watching this on YouTube right now, you know what Spotify is. Their balance sheet has $1.8 billion in liquidity, and they expect to be cash flow positive for the year. We'll get to their free cash flow because that's really what I want to touch on with this company and what I think the biggest thing going for them right now is. So in the past quarter, they added 5 million monthly active users and 6 million premium subscribers. So premium subscribers are what the company's really going after. They run a sort of freemium model where you can download Spotify and use their service for free, but with that you're going to get ads and you're going to get a lot of limitations to what you can do with the app. But if you upgrade to their premium service, that's where you have pretty much unlimited use of their features. So that's really Spotify's strategy. They're trying to create a funnel where they get customers to try the free version of their service, and then when they like it, they're going to upgrade to a premium subscription. Their gross margin was 25%. That has stayed consistent over the past year. Their margin has been right at 24-25%. So that's a good thing for the company, seeing their margins stay steady as they're growing. So again, monthly active users grew 31%, a great sign. And it's the 3rd consecutive quarter with year-on-year growth above 30%. So this is a company that's growing extremely fast and is very efficient at adding new users to their service. And they're also seeing growth in reactivations. This is no surprise with the stay-at-home orders for a couple of months. No surprise that a lot of people are going to be back on Spotify listening to music and podcasts. So here are their users by region: 26% in North America. The majority is in Europe because that's where this company is based, and then 22% in Latin America. Okay, so now we get to the part on content, and this is a very important part for Spotify because it's been such a large driver of their growth. In Q1, they launched 78 originals and exclusive podcasts, and now they have a lot of strong brands in their podcast network. They acquired The Ringer, which is another podcast network, and they have podcasts from FaZe Clan, which is an esports group. They also just signed Joe Rogan to a historic $100 million podcast deal, and that is huge for this company because Joe Rogan has such a large following that people are going to follow him anywhere. They also made an agreement with Kim Kardashian, another person with a ton of followers, so that's going to drive so many more users to Spotify. And with Spotify, their podcast growth is really what I think is going to be driving this company going forward and eventually turn them into a profitable company. Where the trend is shifting, podcasts are becoming much more popular year in and year out, and Spotify owns some of the largest podcasts in the world, like I just said, Joe Rogan, and so many others. You can read up on them in here, and I am big on podcasts. That's a part of the reason why I invested in Cumulus stock, which is the radio company that also owns a podcast network. I'm very bullish on podcasts for the next couple of years. I think the potential for a return there is huge. And so while I think Spotify's music business isn't very profitable, I think this transition to a more movies and podcast sort of platform is really going to drive growth for Spotify. So right now we're going to take a look at their financial statements. For the income statement, not really much to see. They're not profitable yet. For the next couple of years, they probably won't be. I'm very confident they will become profitable at some point, but as they're reinvesting in their business and only focusing on growing their subscriber base, they're most likely not going to be profitable. But what is a very encouraging sign for Spotify is their free cash flow growth, where in 2015 it was negative, and in 2016 they made 81 million in free cash flow, and fast forward to now to 2019 and they made 490 million in free cash flow. This is outstanding growth they have the growth rates on the bottom. Averaging something like 80 to 90% growth on free cash flow every year is insane. A big driver of this is their podcast, where they get huge margins on the ads they play on their podcast, more so than their music. And so this is a good sign. Even though I usually don't like investing in profitable companies and Spotify is not yet profitable, this growth in free cash flow is something that would make me want to invest in them. Now let's get to what kind of valuation they're trading at, because they have doubled in the past couple of months. So is that going up too fast too soon? And we're on Guru Focus again, back to the reverse discounted cash flow model, something I've been using in all my recent videos, so definitely check it out. So this is set to free cash flow growth right now, and basically how this model works is it's telling us if you want to get around a 12% return with Spotify right now, they would have to grow at 48.5% over the next 10 years. So in other words, if you think Spotify's free cash flow will keep growing at around 50% a year, you're most likely going to get a pretty good return right now. So that begs the question, will they grow free cash flow at almost 50% a year for the next 10 years? And in my opinion, probably not. I think that's a pretty big ask for a company like Spotify. Their free cash flow has been growing over the past 4 years. They've been crushing this rate. They've been growing at like 90% a year. And I do think they'll keep up that fast growth, at least for the next few years. Growing at a rate of 50% for over 10 years is something that's extremely hard. As Spotify gets bigger, that growth is going to slow down at some point. So I think over the next 10 years, they probably will average a lower growth rate than 48%. Now, that being said, their free cash flow will most likely still grow very fast. And so if you do want to lower that required return to 12%, you could justify buying Spotify here. We can also take a look at some of their other financial metrics. So I think a very good comparison to Spotify is Netflix in terms of what kind of companies they are. They are both content streaming companies, and they both have a subscription service. So I think Spotify and Netflix are two very similar companies, and I think you can compare how they're valued against each other to see which one is more undervalued. And so with companies that aren't profitable, usually the most useful thing to look at is price to sales. So we can take a look at Spotify's price to sale is right under a 6. So we'll call it a 6 price to sales ratio for Spotify. And now we can take a look at Netflix to see how they're valued right now. And Netflix is valued at over a 9 price to sales ratio. So basically what this is saying is if you think these two companies should be valued the same, which in my opinion, that's a pretty reasonable assumption that they should be, then Spotify's undervalued compared to Netflix. I probably wouldn't go and dump all my money into Spotify right now because it's undervalued compared to Netflix. I think Netflix is way overvalued compared to what it should be. So this is sort of where you have to make a decision. Is Spotify undervalued or is Netflix overvalued? I think it's a little bit of both, but just from this you can see Spotify does have some more upside if you think they can reach the same valuation as Netflix. Which is trading at a pretty lofty valuation right now. Another very good thing about Spotify that I don't think I touched on, they have no short-term debt, and their long-term debt is very negligible, so they have very low amounts of debt, and that's going to allow them to keep investing in the business, not having to worry about being profitable at any point soon because they don't have to worry about any debt to pay off. So I think that's a big plus for this company. If a company is not profitable, having a ton of debt is almost never a good idea. So Spotify has the right idea, and that will continue to keep driving their growth going forward. So those are pretty much my thoughts on Spotify. Overall, great company, growing very fast, and that's expected to continue. I don't see any reason why that would change. Like I said, I think the podcasts are going to be the biggest driver of growth for Spotify going forward. Would I buy Spotify right now? Me personally, I wouldn't. I think while the upside is definitely there for Spotify, at these prices, I think there's also a lot of room for downside and them to go down sort of off these highs they've made in the past month. So right now for me, Spotify is not trading at that margin of safety, which is what I really like when buying a stock. And if they ever got down to a level where I think I could buy Spotify at a discount, then I think they would be worth taking a closer look at. So that's why I'll pass on Spotify for now. If you did buy and hold Spotify right now, you bought Spotify and you just close your eyes for 10 years, and 10 years Spotify is almost definitely going to be a lot higher than it is right now. So if you are interested in Spotify for the long term, I think it's worth it to take a look at these prices. Again, this is not any kind of financial advice. I'm not a financial advisor. I'm just giving you my personal opinions on Spotify stock. So I think that wraps up this video. If you want me to analyze your stock next Saturday, join the Discord chat. It's the first link in the description, and let me know what stock you want me to go over. The stock with the most mentions is the one I will make a video on. So I hope to see you on the Discord, and I'm planning a lot of cool videos this week, so keep on the lookout for those, and I'll catch you on the next one.